Hi, I'm Firas, and welcome back to BrandBucket Academy. In this episode, we're taking a deep dive into the world of domain investing. Whether you're just getting started or trying to refine your portfolio strategy, this session is packed with real, hard-earned insight. Margot Bushnaq, founder and CEO of BrandBucket, shares what every new domain investor should know, from budgeting and pricing to negotiation tactics and long-term planning. If you've ever wondered how to approach domaining like a business, not just a side hustle, this one's for you. Let's get started. Hello.
Hi.
Welcome back.
Thank you.
All right. Well, today we're going to be talking about advice for domain investors. Getting started with domain investing. What's the first thing someone should understand before getting into domain investing?
It is like any investing, it's a risk. I think people get very excited by the prospect of high returns, and they think that the amount of money they're going to put into it to get into it is guaranteed to come back, and that's not necessarily the case. So like any investing, you need to assume that your upfront cost could potentially be completely lost. And you have to be willing and able to lose that amount.
And more importantly, the time that you actually put into it. But
yeah, and being so risky, you don't want to quit your day job just because you got very excited about something. There is, markets can turn. Your skill, like if you sold the domain name one day by accident, then don't assume that you are really good at this and spend all your time doing it, because maybe you had a one-off fluke sale.
Mm-hmm.
So ease into it, make sure you're good at it, make sure you have your own strategy, and be willing to lose everything that you put into it.
Yeah. So basically, assess the opportunity, but at the same time, assess your own skill set in being able to execute on it well.
And your own financial situation.
Yeah. Sounds great. How does domain investing differ from other type of investing?
It's very intriguing for a lot of people because the returns can be so high. There are many cases of people making 100 times their original investment when they make a sale. If you're dealing in very valuable domain names, obviously it's not going to be 100 times, but there's still, a big reward there. If you buy a name for $200,000, you could flip it for $400,000. It's a 2x return, but you've made $200,000. And I think that is very unique because most other assets in the world, like real estate or stocks or even crypto at this day and age, the upsides aren't as large. You have to play in smaller returns at more volume. And also, what everyone needs to understand when you get into domain investing is there are yearly renewal fees. It's like property taxes. Real estate, you have to budget for the fact that you are going to be paying something every year, or in case of real estate, usually twice a year. And it's not like an NFT or a stock or a token, a crypto token, that once you buy, you can hold forever. You can just sit on it and forget that it's there. You are going to be reminded every year that it's there, and you're going to have to pay to keep it. And so you have to budget for that and plan for that.
Yeah. What are some realistic expectations for new investors entering the space?
Realistically, it's going to take you 2 years to find a strategy that works. And in that time, you are going to register a lot of domain names that you later drop as your strategy gets refined. You are and domaining is a long-term game. the fact that you are selling to people starting businesses most of the time, at least in the audience that BrandBucket deals with, we sell to startups and entrepreneurs, and there's a constantly rotating number of those starting. Some years are great for the startup economy, and there's tons of people starting businesses, and in those economies, more domain names get sold, but then that can ebb, and there can be times where people are a little more nervous about starting a startup if the economy is not so great. And you need to be ready for holding your assets for at least 10 years in order to kind of see the full return and to be able to kind of hit the full cycle of people starting startups.
All right. So I'm going to press you a little bit harder on this one. Let's say I'm a new domain investor coming into the market, learning the market, right? And I have, say, a $10,000 budget that I'm going to be investing, and I want to be able to, put it into the domaining space. What would be realistic expectations that I can have? Am I going to break even? Am I going to make a 10%, 20%, 30% in the first year, second year, third year? Like, how would you, based on experience and based on the, you being the operator of one of the largest marketplaces in the space, can you maybe like set the tone for me, and so that I can feel like what would be my potential if I have that much money to put in?
Definitely, if you're going to be spending $10,000, you need to spend at least a month educating yourself on the industry and educating yourself on how startups name themselves, and prepare yourself, because I've seen a lot of people come in, spend $10,000 in 1 month on domain names, and they don't realize that in 12 months from that point, they're going to have to spend a lot of money to renew those names. So you have to, if you're coming in fully educated, or at least partially educated, I would say, first of all, spread out your purchasing path. It's going to come back to haunt you if you buy a lot of domain names in 1 month and they expire in exactly 12 months. So plan to kind of gradually dive into the market.
Dollar cost average, as you will. But then you can expect to really not sell anything your first year. And you may come back around, and if you're constantly taking the time to learn and follow trends in that year, you may come back around when your first batch of names are up for renewal and decide, I didn't know what I was doing. I'm going to drop all of these and I'm going to start from scratch. But if hopefully you've had 1 or 2 sales and success stories that kind of give you some breathing room to be able to stay in the game. And if you can make enough money to, hopefully this is your side hustle. I mean, if you're going all in on domain investing, you have to have a day job or cash to float yourself. But it's going to take, you have to expect it's going to take 2 to 3 years before you can have a portfolio and a style and a strategy that is consistent enough in a very inconsistent industry to actually become a business and to become a legitimate side hustle. And in the case of some people who've been doing this for 20 years, it's their full-time job. But you can't go from 0 to 60 right away. Expect that it's going to take you 2 to 3 years. Okay. So take the 10,000, maybe split it in half, spend half of it in the first year building up my portfolio, the other half keep on reserve for being able to do the renewals. Would that be kind of like a good split?
If you, definitely have enough to keep your names for 2 years. So if you're buying names that have not been registered before, if you're buying hand-registered names, then it should be half. You have half for now, and half for when they come back around for the second year. If you're buying things at auction that are a bit more expensive, there may be 5 times a hand registration. You can take a little bit more. You can take 2/3 of your budget for now, and buy some and save the other 1/3 for when they come back around, because everything renews at the same cost. It doesn't depend on how much you paid up front. Everything renews for about $15 if it's a .com. So you know exactly how much you're going to be spending in the second year, so reserve that.
Yeah.
If you buy one name for $10,000, you don't need to reserve a whole lot to renew that one name, but you might need to pay a little bit more to market those. And in all of these scenarios, there is going to be an upfront cost of paying for appraisals, paying maybe to, boost them in different marketplaces. So there is going to be some marketing expense, and it's your time at the same time.
Yep. Okay. Next, we're going to be talking about building a smart portfolio. How do successful investors choose which type of domains to focus on?
Successful investors have been around for a while, and they have sold enough things to actually call themselves a successful investor, and they know their own personal creative style, and also they've learned at that point which industries they understand and how they can price names appropriately for that industry. And in the case of negotiating, they've learned how best to negotiate and sell their name to someone who comes knocking and asking about it.
Okay. What are the traits of domains that tend to hold or increase in value?
Any domain that has a large buyer pool is going to hold its value. So that can either be something that's rare. There's a finite amount of English dictionary words out there. There's a finite amount of 2 and 3 and 4 letter domain names. Especially that number gets even smaller if it's pronounceable. And so if in all of those cases, there are many, many, many startups who would love to use any of those things. There's lots of people who want a 3-letter domain name for their business. There's a lot of people who want a dictionary word for their business. And because of that, the larger the buyer pool, the more competition there is. And therefore, those will always hold their value because there will always be a buyer. If you buy something very, very specific and niche, and your buyer pool is a handful of people or 2 people, it's not going to hold its value, especially if those 2 potential buyers in the world end up going with something else and they don't need a domain name anymore. Then your potential buyer set is 0.
Interesting. So again, goes to enforce not following fads and trends, because those end up potentially limiting, so being able to pick a name that is more applicable to a wider pool of potential buyers is the name of the game, at least in the beginning, if you are not specialized and you're basically gauging what you're trying to do.
Yeah, in the case of fads and trends, in the very short term, there's a very large buyer pool, but then that shrinks a lot. As soon as the fad is over,
very quickly,
it takes a nosedive, and you've lost value.
How can investors balance short-term flips and long-term holdings?
I personally think domain investing is very much a long-term game. I think every time you flip something, the reason you're flipping it is because you are probably discounting it way below its true value. And that not only hurts the market as a whole, but it hurts any name that you have in that niche. If you're holding out for each name being sold at $3,000, but then you sell a couple for $300, then you're kind of losing any kind of potential data that you personally have for the next buyer. If the next buyer comes along and says, how do you know this is worth $3,000? Your own faith that it's worth $3,000 is eroded at that point, because you have no history of being able to sell it for $3,000. You don't have the confidence to be able to sell it for $3,000. And if they want proof that you've sold other ones for $3,000, you don't have any. So the reason domaining works in marketplaces like BrandBucket is because we put so much thought into the pricing to make it fair for buyers and sellers. And there are so many transactions that happen at full price that there is full faith. It's our faith, the seller's faith, and even return customers' faith that that price is what it is. And short selling and trying to dump something for cheap or taking the first offer that come in only erodes the kind of the value of the market as a whole.
Yeah, that's great. So I guess BrandBucket is doing the industry a favor by setting a price point. As far as I know, BrandBucket is the only marketplace that actually dictates the price of the name that's being sold through it. Every other marketplace out there gives the sellers so much leeway to inflate their pricing or deflate their pricing in times of need, and makes it almost impossible to be able to maintain that trend or that true value for what that name is.
And the make offer functionality, while I understand it helps sellers in the short term be able to kind of, any money is good money at that point. It's so confusing for the buyer because they don't understand if one name has both a price and a make offer, why would they ever pay full price? But then if on the same marketplace, if some have only a price and some are make offer, they lose trust in, who's actually running this marketplace. Is this just a case of every seller for themselves? Or is this a trusted third party keeping a very level playing field for everyone?
Yeah. I get it. Yeah, it's definitely. I can see the make offers value when you're dealing with very low value names, like if it's not a .com and if it is an alternate, and like you're trying to get the most money for it and so on. But then for high value brandable names, like when you're reaching the 1, 2, 3, 4 tens of thousands of dollars for the name, you want to be able to maintain a certain equilibrium in the value of that name in the marketplace. So
I would add on to that, at the very, very high level, in the multi-million, a make offer can be a friendly way to open the door, to kind of weed out non-serious buyers from serious buyers, because most of the transactions at that level are a very long conversation.
Yeah.
And you need to get the conversation started at some point.
Yeah, that makes sense.
But to your point, at the very low level, you do see a lot of make offer, because to the person that owns the domain name, they're basically putting out to the world, I don't know what I would value this at. Maybe nothing. What do you got?
Yeah. So just seems like for domain investors, actually being part of the BrandBucket ecosystem, you're not only investing in a fair marketplace, but you're also helping the industry and in maintaining proper equilibrium when it comes to pricing, and making sure that you're not overcharging or undercharging. It's fair market value.
Yeah. Before BrandBucket, 20 years ago, no one knew what to charge for a pronounceable 6-letter name. There was no inherent value. Most people were happy to sell one that they had for $50. Some people got lucky and found the right buyer and the right mindset with just kind of a budget's unlimited mindset, and they were able to sell it for $100,000. But then there's this huge area in between of people who didn't know what their names were valued at, both on the buyer and the seller side. The buyer would come in and see a make offer and be like, I have no idea. why don't you give me an idea of what I should start with? Should I start with $50?
Yeah.
Should I start with $10,000? I don't know.
Yeah.
And now BrandBucket has made the market for these type of names, these brandable, evocative, sometimes invented names, where everybody knows now that even off of BrandBucket, that name can be sold for $3,000 because BrandBucket has been so consistent in its pricing and its insistence on pricing for sellers and having everyone agree to a price before it goes in front of a buyer, that we've made these assets have that value.
Yep.
It kind of makes me wish we had decided everything was worth $10,000 instead of $3,000 back then.
Yeah.
But we wouldn't have sold as much, and the market, they would have found.
Yeah, we would have found the market would have
the
market would have found you, would have told you, because there's a psychological aspect to the whole like pricing, like of something and the value of it, especially in the brandable name where we started out at was. And
we were startup owners, and we knew what was reasonable to pay compared to your corporation fees and your legal and what it was worth on the marketing side. We knew what the sweet spot was.
Yeah. That's awesome. That's great. Okay. Next, we're going to talk about research and market trends. What tools or techniques do you recommend for researching domain trends?
There's a lot of great blogs out there that talk about what names have sold. There are a handful of reported sales. Those are usually on the very high end, so you can kind of see the top of what things are selling at. In the range that BrandBucket plays in, there's not a lot of sales shared because each individual seller has their own strategy that they're keeping very, close to their chest, and they aren't willing to kind of have a lot of people seeking the knowledge, riding their coattails and competing with them for the type of names they like. But some do sneak through, but in no means do the reported sales equal a trend. There's a lot of stuff happening that isn't ever public. And so I think the best trend to watch is outside of the domain industry. It's actually watching the startup ecosystem. You see what companies are being formed and what are they using for their domain name. You see what companies are getting funding. Mm-hmm. Because usually a lot of new startups are chasing the funding. And so they're closely watching funding, and they want a name that is similar to who just got the money.
Yep.
And so if you kind of pull yourself out of domaining for a while and actually look into the domaining is the world of the seller. And really what you need to be focusing on is the buyer, what it comes down to. So you need to look at what buyers want, what buyers are actually spending.
Yep.
And it's in a sense a lot more valuable.
Yeah, that was very interesting. I guess one thing I would do is look at businesses that just got funding and not only look at what names they have, but look at what I would name them if I was the one starting that business, mm-hmm. and thinking ahead on how that business is going to basically evolve and explore and, go after a market or a wider market, and use that as a technique to be able to add to my inventory of names. How do investor instincts and data work together when evaluating a domain's potential?
Data, for sure. You need to know what a buyer is willing to spend. So you should seek and absorb all the information you can as far as, what buyers have shared, what they've paid for their name. And actually, that can be data that you can use during negotiations with someone. If someone comes to you and asks why you're charging what you are, it's good to have some data points to back you up. But your instinct, and again, this comes with years of experience, it comes down to having a sense for who the buyer is. A lot of times they come anonymously. They don't want you to know they're coming from a large company or a company with deep pockets. And you just have to gauge based on your faith in what the potential of the name could be in the right hands versus any kind of clues that you get from who's asking about the name.
Yeah. What trends or signals are you seeing in today's domain market?
Today's domain market is interesting, and it's very reminiscent of 2008, 2009, when we had a bit of a recession. At that point, VC funding had dried up. Everybody was very timid about starting any kind of business. Everyone was dealing with the world that was only talking about failure, which business, which bank is failing now. And this year, 2024, 2025, is very similar. There have been very few mergers and acquisitions. VC funding is, very, very light at this point. And in general, I think there's just an air of hesitation. And so if we look back at trends that we saw in 2028, 2029, we saw businesses kind of building for the long term. They weren't planning to start a business with the whole, I'm going to build this and exit in 1 year and be rich. Now it's, I'm going to build this business, maybe exit, maybe not. Maybe I'm going to leave it to my children. I'm planning to employ 100 people this year, 1,000 people in 5 years. And so people are retrenching. And I think all this goes to say that we're seeing a resurgence in interest in invented names, in names that are short and pronounceable, but really don't mean anything or don't have a keyword in them and don't point to a specific function. Because I think everyone's assuming, whatever we start now may evolve, or we may merge with someone, and our MailChimp may offer something more than just mail in 5 years. And so I think they're gravitating back towards names that are much more broad and kind of much more vague and usable across a lot of industries.
Yeah. One thing, as you were speaking, and like the whole trend of being able to, maybe I would say the pendulum just maybe swinging back towards invented names, which actually was one of BrandBucket's initial core, offerings when we first started out. I do see, which can be a very interesting, it's more of a prediction rather than a current trend, but the whole AI agent, I would say, revolution/evolution over the next few years, where you're not going to be seeking websites. You're going to actually be talking to agents, and agents are personalized and almost, in lack of a better term, humanized by giving him a name. You talk to Gemini, you talk to Grok, you talk to a single word name, right? It could be invented, it could be a keyword. You talk to Siri, even Google, you talk to Google, you're talking to a name, and that will end up being matched with a certain service or a certain offering or a certain functionality. And you're not going to be talking to a 3-letter keyword, website. You want to be talking to that agent because, again, it humanizes the experience. It makes it more friendly. So I do think that on the, as the agent naming, trickles downwards to the rest of the industries, I would say we're probably going to see that trend, come down on the higher end names, and then eventually come down to everybody else's services and offerings. So, but yeah, that's a an interesting thing to keep an eye on and see how that changes the perspective. This is something that's very, or this topic, I would say, is very near and dear to us, and we've always been kind of on the lookout for, and we kind of stuck with we don't want to be following trends. We need to be adapting to, and with BrandBucket being, I would say, the trend setter in the industry of domaining, especially in the industry of brandable domain sales. You were the first to put logos on domains. You were the first to set market price on a domain. You were the more buyer friendly marketplace, and many other firsts. To not to fluff your feathers, but you've always kind of caught those trends very early on, before they became, the norm, if you will. Are there certain trends that you foresee, or predictions that you might see the market move towards, that you want to be prepared for? Or is that maybe giving up too much of your strategy?
Definitely, and I don't know how long this interview is going to live, but a more recent change that we made that definitely followed trends, and we weren't the first to do it, but I think we put a lot of thought into how we did it in order to kind of maximize value to the domain industry as a whole. But it's the leasing, or not really necessarily leasing, but like a pay in installments for domain names, and that followed consumer mentality, because that was starting to become so popular in e-commerce in general. Back before Klarna and pay-as-you-go plans, people they paid their car in installments, and that was pretty much it. But now you can buy everything and pay as you go. And we were seeing that maybe that, especially in our niche of selling to entrepreneurs and startups, that is a very affordable way to get your foot in the door. And especially if you fall in love with a name, but you're not quite set on your business plan, but you want to lock in the name now, you can get started with it, and hopefully by the end of 1 year, you've paid it off and you can go full force, and it's a nice way to break up your costs over time.
Great. Awesome. All right. Let's talk about sales, pricing, and negotiation, your favorite topics.
The difficult topics.
Yeah. How should investors think about pricing their domains?
That's a skill that's acquired over many, many years. I would say you need at least a good 7-8 years in this industry to be confident in pricing your own domain names. And until that point, you need marketplaces like BrandBucket, or at least some evaluation tools. GoDaddy has an evaluation tool. There's other evaluation tools out there that are getting better, but until they're humanized, unless they're looked at by a human, they're never going to be, extremely accurate. But you need to rely on the tools at your disposal, and not just your gut.
Yep. Okay. What are some strategies for negotiating with buyers?
This also takes years and years of experience. But the best strategy that we've found is the fact that if a buyer takes the time to inquire about a domain name, if they've gotten to that point where they reach out, they're very much interested in that name. And it helps to be able to show them different options around what they're looking for, usually at a higher price point, that helps solidify their choice. It's really not common that they come in wanting option A, and you show them 5 other things, and they say, "Oh, you're right, that one's better." It's never the case. Everyone's always in love with what they're asking for. And the way you convince them that they made the right choice is showing them 5 things that they don't like. And to me, that's the value of a marketplace. A lot of sellers are nervous about putting their name up surrounded by other names. But more often than not, and almost always, I'm talking like 98%, the other names help sell your name. Because the buyer, if they're looking at one, if they've zeroed in on it, then the other names are just supporting your price and supporting your value add. They're not distracting at all.
Yeah, that makes sense. How do you avoid underselling a high-value domain or overpricing a weaker one?
Everyone's always afraid they're going to undersell a high-value name. And sometimes they do get undersold. Sometimes you sell a name and you find out later that it was an enormous company with billions of dollars in their pocket. And you could have asked for 10 times more. But at the end of the day, you agreed on a value, and at the time, before all that other knowledge, that seemed right to you. So that was the right price at that time. Overpricing a name is much more common. And I think, again, that's the value of a BrandBucket marketplace that has a third party pricing everything, is it does make the names make sense to each other. If there's a name where on marketplaces where some sellers are allowed to uplift very, very high and some aren't, or a marketplace that's a complete free-for-all, there are going to be times where your name that isn't supported by anyone's opinion other than your own is going to be priced really, really high and is never going to sell.
Professionalism and longevity. What separates a hobbyist domainer from a true professional?
It's whether you've quit your long-term job. You quit your day job. Everyone should start out as a hobbyist. It's not, I would say the percentage of people that start out wanting to be investors and that end up doing it full time is less than 5%. It's really that hard. It's hard to have the stomach for it to go through a dry spell. It's hard to have belief in your pricing and to have belief in your portfolio. And it's hard to find your specific niche. And I think there's room for a lot of hobbyists, and I think it's a great side hustle. But to be a full-time investor, you need to be 5-6 years into it and to really have proved to yourself that your strategy is good, that your pricing and your negotiation skills are good.
Yeah. Yeah, it's always struck me as, when we first started with BrandBucket, honestly, I didn't really think that it would go beyond the hobbyist. I feel like it was always this extra income. It's a side hustle. It's some way to be able to make a little bit of money. And yes, there's definitely been some domain investors that made a lot of money in the years, prior to us starting, us included, but we never really looked at it as something that we would ever think about being our own, professional, long-term, actual focused business, right? Or a way to be able to support ourselves. And over the past many years, I would say, since we've started 20 plus years now, the fact that there are hundreds of people that are actually making a living off of BrandBucket, and not recommending this for anybody jumping in before they see that they're capable of doing it. But, with thousands of sellers and hundreds of actual full-time investors that are actually providing for themselves and their families is something that very, empowering at the same time, makes you feel a greater sense of responsibility towards making them successful and working towards the success. So thank you for everything that you do. The one thing that I would be very cautious about is, like you keep repeating, is jump into the, like the shallow end of the pool, feet first, get a dip in the water, get to feel whether you like it or not. It is something that you engage in. Is it something that you're excited about every day? And then build up towards becoming, and focus on the excitement as a side hustle rather than making it become your long-term investment. And then eventually, if it does end up that you find that you are very good at it and you're capable of actually growing it to a full-time job, then all the power. It's something to keep in the back of the mind. So, What role does BrandBucket play in supporting domain investors?
There's a large amount of domain investors who they do have another full-time job and they want to be successful at their side hustle, but they can't spend 3 to 4 hours a day domaining. So BrandBucket is built as a full-service platform for that type of domainer. It's someone who needs a third opinion on pricing, or a second or third opinion on pricing, someone who needs professionals to handle any inbound inquiries, someone to help market and promote and make sure their name gets found in a search and put in front of the right buyer at the right time. And all of that is pretty much a set it and forget it. If you just have the creativity and you can use your creativity to register names and they get accepted onto the BrandBucket marketplace, we take it from there. And there's all sorts of domain investors that want to, fidget with pricing or discount for a couple of days or do all sorts of just kind of funny tricks for the buyers out there, or who want to spend the time, they want to intentionally register 100 new names this month and drop 100, out of their portfolio. And that kind of active investor is great. And it's definitely a part of the ecosystem. But for the people who just want to focus in on the creativity and finding the good name, BrandBucket exists to do everything else for them.
Great. What mindset should new investors adopt to build a sustainable long-term domain business?
Definitely keep your finances in mind. I think spreading out your purchases, knowing that this is a renewable asset, something you are going to have to pay every year on, you want to spread those costs out. Educate yourself and look at trends and have faith in your own creativity. And I would say just being creative in general is looked upon. I mean, you can buy 8 variations of the same name, or you can buy 8 different creative names that serve the same industry. So, I don't know, just try your hand at different strategies and see what works for you and have patience.
Great. That sounds good. Well, I guess that concludes our conversation for today. Thank you for your time and looking forward to talking to you on the next segment. If you're ready to grow as a domain investor, BrandBucket is the place to start. Whether you're just exploring or building a serious portfolio, our marketplace gives you the support, tools, and exposure to succeed. Visit brandbucket.com to browse curated brandable names, submit your own domains, or simply study what great naming looks like. This is where creativity meets strategy and where domain investing gets smarter. Thanks for watching, and we'll see you in the next episode.